Bitcoin is sitting around 90,000 US dollars and social media has now officially lost its mind. TikTok is screaming bear market confirmed, YouTube thumbnails look like a funeral posters, and Twitter is having a meltdown. But let me tell you something very simple. This is not a bear market. This is a classic shakeout, the oldest trick in the book used to scare retail out of their positions before the real move begins. I've traded through multiple cycles. I've seen this dozens of times. And today I'm going to walk you through exactly why this isn't the end and it's a reset. We're going to look at the Wall Street cheat sheet, talk about market psychology, expose the TikTok chart trap and explain why the 4-year cycle is dead and show you why this macro environment is exactly positioning for something big. When Bitcoin drops to 90K or below 90K, retail panics immediately. And I get it. Even I, when I woke up this morning and looked at my charts, was a bit like, ush. Suddenly, the same people who were shouting BTC to 200K 3 weeks ago or 3 months ago have switched to bear market confirmed. And it's over. Let's sell everything. We've all seen them, especially on TikTok. This emotional flip-flopping is retail's biggest weakness. Because what's actually happening right now isn't a shift in fundamentals, it's a shift in sentiment. And for those of you who don't know, sentiment means how people feel. Markets don't crash because of charts. Markets crash because of emotion. And right now, we're seeing a sentiment crash, not a structural one. Meanwhile, the people who actually move markets, the institutions, the funds, the algorithmic traders, are calm. They're accumulating. They're not panicking. And that tells you everything. Everybody watching this video needs to understand one thing today. The psychology of a market cycle never changes. The Wall Street cheat sheet has predicted decades of investor behavior absolutely perfectly because humans don't change. You need to think of this as a cheat sheet. Just look at these stages. We've got euphoria, complacency, anxiety, denial, panic, capitulation, depression, disbelief, and then finally hope. And here's the key point. We have not had euphoria. You tell me when. When during this year was there euphoria? Tell me. Because it didn't happen. Even when Bitcoin was at a peak and its highest point this year, the sentiment on the fear and greed index was still low. At least medium. It wasn't at extreme greed. And the reason for that is because people didn't believe that everything was going well. Even though it was at a peak. Not once, not even close. There was no widespread FOMO, no mainstream mania, no retail flood, no altcoin blow-off tops, no 10x meme coins every single day, no taxi drivers talking about crypto, no celebrities pumping random projects, and no media hysteria. And for those of you that have been in crypto for a while, know that is what euphoria looks like, not what we've seen this year. If anything, I'd be saying this year, people have been scared. We haven't seen any of that hype. We haven't even seen complacency. Never mind euphoria. That alone tells me one thing. This cycle is not over. It hasn't even entered the mania phase yet. Where we are right now, and I'm going to say this clearly, we're in depression and disbelief. Look on that chart where depression and disbelief is. Now remember, for those of you who haven't seen this before, as it goes to the right and we reach the end, it starts again on the left. Depression and disbelief is over there on the right-hand side. Now, what comes next? Shakeouts always happen before hope, not after, not at the end. Exactly where we are right now. If you've been following me for quite a while now, either on TikTok or on YouTube for more than a year, you'll remember something I said over and over and over again. The 4-year cycle is dead. I said it long before the crowd even considered it. I stand by it even stronger than ever today. The pattern broke because macros destroyed it. And here's why. Interest rates broke the rhythm. Crypto is a risk-on asset, and risk assets die without cheap money. Then we got liquidity that's vanished. Global liquidity tightened and inflation fights stopped capital from flowing. Then you've got the US turned the money printer off. This is huge. Every previous mania or euphoric moment in crypto came directly after liquidity injections. When there's no liquidity, there's no euphoria. It's simple. Then we've got institution replaced emotional retail. And institutions don't FOMO. They buy fear, not mania. This is why the cycle is delayed, not cancelled. We are not in the 4th year anymore. We're now heading into a 5-year, something that we've never seen before, a cycle that's got a 5th year. And why is that? It's because the money flow isn't there. But here's the twist. When rate cuts begin, when liquidity returns, and when the money printers turn back on, then the real alt season could begin. Then the euphoric phase can hit. Then the cycle can complete. We're not late. We're actually early, and nobody is talking about it, and it is blowing my mind. I need to talk about something that I've seen lately, and it's starting to get out of control. People are getting sucked into these TikTok chart analysis like I've never seen before. You've probably seen the clips. This head and shoulders means we're crashing. RSI is breaking. We're going to 40 grand. Wave C just started. Sell everything. Sounds convincing, right? Here's the truth. Those influencers on TikTok are not telling you. These people do not have a crystal ball. They're not predicting the future. They're looking for patterns. But here's the dangerous part. People don't look for the patterns that are true. They look for the patterns that match how they feel. This is called confirmation bias. Right now, everybody is scared. So they look for a chart pattern that supports fear. And TikTok creators are feeding this fear because it equals engagement. But here's the twist again. Market manipulators also know these patterns. Do you really think that Joe Blogs on TikTok is the only one that can see the pattern on a chart? Behave yourself, man. The market manipulators know about these chart patterns before Joe Blogs on TikTok even knew what a chart was. Whales know support, resistance, trend lines, liquidity pools, stop loss zones, wedge patterns, bear flags, RSI oversold levels. They know exactly where retail places their stops. They know exactly what patterns scare you the most. They know exactly how to trigger emotional selling. Charts do not predict manipulators. Manipulators create the charts. And while retail panics over patterns, smart money is doing what smart money always does. Slow, intentional accumulation with strategy during fear, not during euphoria. Money is never made in euphoria. It's made during fear, exactly where we are right now. Let me be honest with you, and I'm going to be brutally honest with you. Crypto is a risky asset. In fact, it's the riskiest of all the risk assets. It's volatile. It's unregulated in places. It moves violently in both directions. And yes, it could technically go to zero. The risk is real. Anyone who tells you otherwise is lying. But here's what macroeconomics and history tells us. This is not doomsday. The market is behaving exactly as we expected. And we are in the exact position where big reversals often begin. We're in high fear, depression, disbelief, peak uncertainty. These stages always feel like the end. Every cycle, this moment gets labeled as, this time it's different. And every cycle, it never is. Is it possible that Bitcoin goes lower from here? Absolutely it is. Is this the end of crypto? No, definitely not. Is a bounce from here probable? Yes, it is. Because shakeouts always precede reversals. Not sometimes, always. This is the time smart money accumulates. This is the time to have a strategy. This is the time to stay calm and not be emotional. Here's my honest prediction based on macro, sentiment and market psychology right now. I can see that Bitcoin is likely to stabilize and will form a base around the region we're in now. Could it go backwards first? Of course it could. But I think right now around here is where we're going to see this base forming. Then we're going to see some sideways movement. Retail is going to get bored. Engagement is going to drop off and TikTok will go quiet. See these charters on TikTok? They'll fizzle away. This is where accumulation accelerates. Rate cuts will begin. This is the big trigger. Liquidity enters risk assets again. And then we'll have liquidity injections will resume. Money printers will get turned back on. The stimulus will return and institutions start deploying again. Then we'll see altcoins explode. The real alt season will begin. The alternative coins to Bitcoin will start to fly again. And then we'll see euphoria kicking in. We'll see retail FOMOing back in and liquidity frenzy will be all over the place. That is the order. That is the structure. And we're not even halfway through it yet. Before we wrap up, let me remind you about something important. Most people lose money in crypto for one reason. They have no strategy. They are just literally buying when it feels good and they sell when it feels bad and they panic when TikTok tells them to panic. So I created something for you. It's the Crypto Liftoff course. It's 100% free. No signups, no paywalls, no tricks, just real education, the exact same strategies I personally use to make money during the bad times and the good times. If you want to stop trading on emotion, if you want to understand the market properly, and if you want to build confidence, start the course today. There is a link in the description. It's completely free and it will genuinely help you if you think you need some structure into the way that you deal with crypto. Stay calm, zoom out, trust the process. Bitcoin is at 90K and it's not the end of the cycle. It's a shakeout within the cycle. Fear is high, sentiment is collapsing, and retail is panicking, which means the opportunity is bigger than ever. Shakeouts feel scary, but they always precede the bigger moves. And as always, shout out to every single person in the Wolfpack right now that's listening and doing it the right way. And remember this, the strength of the wolf is in the pack.